We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, having major volatility today, hitting a dip area in the first half of the day, running into the FOMC meeting, and then dipping right back down into white with red borders. Now, within that volatility today, our SPY bot sent out notifications in both directions, and at 1:40 p.m. it sent out a bull indicator, and from that moment forward, inflows crossed the midpoint to the upside, and call options went up within minutes 200% plus. And then an hour later at 2:50 p.m. our SPY bot sent out a bear indicator, and from that moment forward, the outflows crossed the midpoint to the downside with full strength on weakness there on 42 vision, and put options went up 300% plus within minutes as well. And if you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY. The FOMC meeting had a lot of details that we need to break down in today's video. And I'm also going to share with you guys some key levels to watch and what 42 vision in the inflow versus outflow is showing. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the first home run was from our Tesla bot. It sent out a bear indicator at 2:45 p.m. And from that moment forward, the outflows crossed to the downside, further weakness on 42 vision, and put options went up 200% plus within minutes, guys. And our second home run, we caught this one in the pre-market. It was FRZA. We caught this one pulling downwards. It consolidated, stayed above the midpoint with full strength on the inflows, full strength on 42 vision into the bell, and it hit a highest point of 30% plus, guys. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, once again, check out that link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, and we're going to cover what just happened and why things fell just as fast as they did and what this means for the next few days or even weeks, right? Because we still have these type of headings that came out yesterday, right? The S&P 500 can get to 4,150 before reality sets in, says Morgan & Stanley's normally bearish top strategist. I broke this all down in yesterday's video. I shared how this is the same strategist that believes that the S&P 500 can head towards 3,200 or even 3,000. And I've shared where they get these levels from with the lagging indicators. I'm going to pull it up in just a moment. But I want you guys to be aware that this right here is still pending, right? Reality sets in. Will it actually happen now as we are speaking? Because look at this big drop here. Or is it going to happen once it bounces back up towards 4,000 and rejects? Because then you have billionaire investors, and this came out today, even before the Fed meeting, stating and warning that the S&P 500 could plunge another 20%. And predicts a US recession next year. This just means, in my opinion, not financial advice, that the volatility is going to continue, which actually means opportunity. But this all coincides with what the Fed stated today, and we're going to break down an article that actually shares some of the comments that Jay Powell shared with us today. But let's go ahead and pull up the bull and bear indicators in the inflow versus outflow, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY. The outflows have dominated since yesterday's bear indicator. You could see it right there up here at 389. Double top here at the 390 area, rejected, Outflows started to dominate. It's been below all day. It finally crossed over and quickly rejected with those outflows, and that was the volatility up and the volatility back down. Now we have hit a dip area here on the 30-minute chart, and if we look at the 15-minute, it is looking pretty extended as well, right? With that bear indicator that popped up, pretty extended into this dip area, and the question mark is, how is it going to react tomorrow? I'm going to share with you guys some of the things I'm going to be looking for, but what this means and implies moving forward, and how the markets feel about what Fed Chairman Powell just stated. So let's look at this article together. So it states here the S&P 500 seesaws between 3,830, 3,896 post-Fed decision on the Powell commentary. These are the main highlights here. So it seemed dovish, right, when everyone found out that 0.75 is the decision of the rate hike. Now, another thing too that was looking dovish is when Fed J. Powell stated, okay, we may slow down in the next following meetings, but it does not mean slowing down means that it ended, right? There's no pivot yet. It's going to continue. And J. Powell stated that they're going to stay the course. Now, when he rocked the boat was right here. It literally states it here. The ultimate level of rates will be higher than previously expected. So one thing that the bond market and the overall market has not priced in, and they were trying to price in, was anywhere between a Fed funds rate of 3 to 4%, or even towards 4.5%. Now he's stating, okay, well, this might be higher. So the question mark is not how fast rates are going, if not how far and how long will they go. And it went ahead and erased all the gains that the S&P 500 had in the last several days and weeks. And it's coming back down to a key support level. And we're going to break down those key levels here. And I'm also going to pull up the lagging indicators in just a moment so we can look at where these price targets are coming from this Morgan & Stanley's normally bearish top strategist of 4,100 and all the way down towards 3,200. And he's not the only one. You also have a billionaire investor here stating 20% drop from here. That is another 3,200 to 3,000 price targets. So something to keep in mind. So here we are, right? Outflows on the 30-minute dropped. Here we are testing key supports at 374, 373 area. The next support below that I'll be watching is 370. And also, if 370 gets broken through the next support, we'll be back here at around 367, 368 area. Those are the key levels I'm watching to the downside, and how these outflows on the 5-minute react. If they have trouble coming back up on the 15-minute, if they stay below, even if they come back up, but stay below, that can actually create pressure to the downside. And the 30-minute staying below the midpoint. And this 1 hour here, how strong it's pulled back. I mean, that was a huge drop. We're at minus 14.9. And I stated in yesterday's video that we're only at 3.16. And it has room to go to 6. And it also had room to go to 8. And the lowest down here was 13, which was way back here on October 13th when we hit the new 52-week low. And based off the history of the chart, it still has a lot more room, because look what happened back here in June when it went all the way down to minus 25, and we've also hit minus 14 before. It's actually been a support level, and if it goes further than that, well, we know there's room based off the history of the chart. So I'm going to be watching that very carefully on the 30-minute and 1 hour, how they react and how far they go from their outflows, as we see right now on the 30-minute, minus 13, and back here in the beginning of September and the middle of September, it hit highs of minus 16 to the downside on the outflows. So something to watch. Now I'm going to pull up the lagging indicators here, and we're going to look at this together with the bull and bear indicators. So here we are with the lagging indicator and the bull and bear indicators, and something that I did not mention earlier. I talked about supports, but resistance to the upside, 375. If that could be broken through, the next area is 380, and then we can start talking about higher levels to watch for tomorrow. So here you can see that this is a lagging indicator because this bull indicator popped up way back here on October 14th, and the crossover didn't happen until here at October 25th. And right now we just got a bear indicator and no crossover has happened. But let's go ahead and zoom out here and look at this from a bigger time frame so you could see where it is that they're getting these levels from. So we've been under a bear indicator since way up here. No crossover just yet from the purple and blue line. And based off history, when there's been corrections, it bounces off that purple line every single time to go ahead and show that the correction may have ended, right? Every single time through the history of the charts, all the way back to 2000, 2007, and it has only crossed in the last two major crashes of the dot-com bubble and 2007. Now, when it has crossed, you could see there our bear indicators are way ahead, and then once it crosses, it doesn't always mean that capitulation has happened, but it has also almost hit a bottom, right? A few months after that. So something to keep in mind there with this lagging indicator. It's not great within the volatility, but when it comes to technical analysis and looking at the bigger picture, a lot of analysis and strategists like to use it, right? Then we also have that when it hits the light blue line, it has capitulated very quickly and found a bottom like it did in 2020. Not guaranteed to be that way every single time as well, because if you zoom out in the last several corrections and crashes, it's only happened once. So this is where the strategists are getting their levels from, right? The purple line is 401 and the light blue line is 307. When you do the math, that's anywhere between 3,000 and 3,200 to the downside, and to the upside at 401, that is anywhere between 4,000 and 4,100. These are the levels they're watching, and right now we're in the middle of it all. We're under a bear indicator, and also on our inflow versus outflow, the outflows are dominating, right? So something important to keep in mind, that this is where they're getting these levels from and believing that there will be a possible run up towards that purple line, but then it'll reject really fast. You see this billionaire here stating another 20% plunge. We also have Ray Dalio. We also have Michael Burry, and we have many others coming out of their way, right, and stating this. And then you have the same strategist that is stating 4,150. He's the bearish top strategist, okay, also stating 3,200. So this could be one of those bear market rallies if we go that way. But after this sobering effect that the Fed brought upon the markets, right now things are moving very quickly on a microscopic level, and we need to watch it very, very closely, because these are the levels they're looking at. This is what they're watching, and this is where they're getting it from. And a lot of people are stating that the markets will not bottom or capitulate until we hit somewhere near this light blue line. So something to not overlook or ignore. And you could see it there that every time we've tried to cross back up that purple line, we've rejected, and the bear market cycle has continued. So if we have rallies, we can't get too excited, especially when the Fed has not pivoted. That's my opinion, my perspective. Again, not financial advice. I look forward to seeing your thoughts down below. And as always, guys, thank you guys so much for watching, and let's make some money.